On Take It to the Bank, you'll find ways to get out of debt, solve your credit card problems, how to make and stick with a budget, simple ways to save, buying or selling a home, and many more financial matters on Take It to the Bank.
Hi, my name is Cordell Thomas, and welcome to Take It to the Bank. This is a program that I think will be quite interesting for many. I'm hopeful that it will be. We've talked about, I think, in the past, and we'll continue to talk about many of the different opportunities you as individuals have for bringing in different streams of income, because these are the times when people are unemployed that you have to find other means of bringing in revenue, and in doing so there are many other implications that we should talk about. If you plan to become a small business owner, if you're a sole proprietor, or you're incorporating, or you're doing a lot of these issues on an ongoing basis, there are all ramifications in reference to your taxes, income taxes. Do you pay them on a quarterly basis? Are you paying salaries? Are you paying workers? Are you paying subcontractors? How does a 1099 work into all of this? These are relevant concerns, and many of us are very afraid and get very intimidated if we see things like an audit and those type of things that are relevant to our concerns. So there are things that we should be aware of. I think it's an interesting program. I hope you will find the same. Remember, a man is not considered successful by how much he has. The Bible says it in Luke 12, verse 15. He says, "Take care to guard against greed. One's life does not consist of the abundance of one's possessions." The abundance of one's possessions. We should take care of how we buy things, what we do, understandings, our needs versus our wants. It's talking about knowing where we're at from a debt standpoint, understanding that we have a budget in place, knowing what we spend, knowing what we bring in, and understanding what we want to put away on a monthly basis, whether it be working up towards a 6, 8, 10-month emergency fund, where we put our retirement savings, what we do with our investments, who we go to for advice. And it goes back to the same issue of making sure we talk to the appropriate professional and just don't rely on anybody that's out there that provides that advice. It's essential to find that out, and I did have a wonderful opportunity to talk to a friend of mine. This gentleman actually creates board games, financial board games, business board games. He is a very wise individual that I really respect a lot, and I love the opportunity to sit down and banter, talk back and forth about things that are going on. His name is Mr. Rodney Watson. He is a business manager at the Mount Rubidoux Church, as well as an entrepreneur. So I would like to go to this conversation I had with him. It's about 10 minutes. I think you'll find it very enlightening, and it leads into this conversation that we're talking about in reference to top financial problems that people have and what we can do to resolve them. Hi, y'all. Welcome back. Cordell Thomas with Take It to the Bank series, and I just wanted to chat with you a little bit about some of the things that I've come across in answers to some of these questions that I've asked people on Venice Beach. I went to Venice Beach. Yeah. It's a tripped out place. Yes, and we asked some people some questions. And we asked, one of the major questions is, hey, when you have a crisis in your life, financial crisis, who do you go to for advice? Now, I'll give you some of the answers. No, maybe I won't. Let me ask you. When you think of a typical financial crisis or something you need advice on, who do you typically, or would you go to for advice?
I would go to an expert for advice. And there's a book called The Richest Man in Babylon. And in that book, he says that you don't go to the brick maker to learn how to make bread. So if you have a financial crisis in your life, or let's say it's not a financial crisis. Say you have a financial windfall. Say you get $1 million at one time. What do you do? Who do you go to ask for advice? One person you should not go to is your mom or your dad, because if they don't have $1 million, how can they help you? There's a saying that we have in the financial world which says, never take advice from someone broker than you. So your teacher and maybe even a pastor or someone like that, if they have never managed $1 million, what advice can they give you about managing that type of money? You need to go and find someone who has $1 million or two and say, hey, what do I do with this $1 million?
But someone that's got $1 million and has used it successfully.
Exactly.
And it's interesting because some of the questions we asked are the same. Who do you go to for advice? We asked, I'd say about 9 different people, and every single one of them, bar none, said, I make the decisions myself, or I go to my mom or dad. Those are the people they go to. Never did they say, I go to an expert. And it kind of makes sense why they're in that problem. We're having, comments about what? Several famous football players, I won't name any of them, the basketball players that have taken their millions of dollars of windfall and now they are broke. $80 million is gone and they haven't really used it to make it better. What advice would you give if you did get $1 million?
Well, again, I would go to someone who has the money. There was a saying, another saying, I love these sayings, they're rich. It says, watch what poor people do and don't do it. That's why they're poor.
Right.
And if you take a mindset, a $30,000 a year mindset and put it into $1 million mind, it just won't work. Because that $30 million guy will still think, hey, I'm spending $30 million. I'm not earning $30 million, so I'm going to spend $30 million. Did I say million?
30,000.
I mean 1,000.
No, but that's okay. But let me throw something back at you. Let me say, I got a person making $30,000 a year. He's saving 7 of that every year. He's doing well. He's okay. All right. I mean, quite frankly, I think the United States mislabels people as poor, poverty, based on the amount of money they make. True. It should be labeled as how they utilize their funds. That's how they should be labeled. Correct. So you can have a millionaire or a person that makes $1 million. But spends $1 million in one, and he is not typically a millionaire because he's spending more than he makes, correct?
Exactly. Yeah.
So you can have a person making a lot of money and a person making like $30,000 or $40,000 a year, because we're talking to you guys in the urban demography right now, and you don't have to make that much money to be successful, but it's key that if you want to be successful with money, you should talk to someone that has been successful with money.
Exactly. You talk to someone who's wealthy, and wealth is just basically how much you can, how long can you live without any money coming in?
Okay.
And that is the type of wealth that you have. So if you could live, a month before you need another paycheck, then you're wealthy for a month. You're a month in wealth.
A month in the air.
A month in the air.
Yeah, right.
You could be, if you save enough money to where you can live a good year without any money coming in, well, you're wealthy for that 1 year. But you're right. You do need that continually income coming in. But most importantly, you do need to ask someone who is successful, who does manage their money successfully. If they have $1 million and you know this, hey, let me take you out to lunch. I'll pay you $1,000. If you could just show me how I should spend this money, how it should come, how it should go. Who should I talk to? Who do you talk to? Who are your mentors? What are some investment tips? You could even ask those type of questions as well.
Interesting. I have another question for you, though. When you're looking at someone that is making $30,000 or $40,000, he wants to invest some money and wants to do some things with it. One of the keys that most people aren't really aware of is the investment markets and all of these type of things that are way over their heads. Again, it goes back to the key issues of getting the right advice. Correct?
Correct. Okay. Correct. So in the book, The Richest Man in Babylon, he talks about that as well. One of the 5 laws of gold is that never invest money in things that you're not familiar with. So if you want to invest in whether it's real estate, portfolio, or mutual funds or stocks or bonds, first you must educate yourself in it. Know about it. Don't just, it's okay to give it to someone who knows what they're doing, but you should also know what that person is doing. Because like you said, those football players, all those people, they did that. And they got taken in by scams. Murdoch, good example.
Interesting. Do you know what the top 3 crises people are dealing with right now?
Type 3 crises, well, one would be financial.
Yes.
And the second would most likely be relationships.
Exactly. Yeah, you're right on line.
Relationships. And the third one is most likely having to do with their jobs, I would say.
You got it. You nailed it. Exactly right. Workplace stress, financial issues is number one, workplace stress is number two, and then the other one, personal relationship, is number three, and they all have to do with financial. Look at what some of the famous basketball players are dealing with right now with his situation. That also deals with finances.
Correct.
Workplace issues have to deal with paychecks and how much someone takes home. And then, of course, financial issues, you spend more than you actually bring in. And then it goes into other issues. But then you talked about, briefly, how much money do you have to survive on if you lose your job tomorrow?
Yeah.
That's a key issue that most of us aren't really aware of. And in the urban areas, we're dealing 2 years before you find another job.
Correct. That's right.
Now, there's something interesting about all of that because, okay, I received a call from a friend of mine in San Diego who's a wealthy entrepreneur that is a philanthropist, gave a lot of money away, developed a whole bunch of things. And I learned a lot from them. She connected with me through LinkedIn, and we talked a bit. But it was interesting. She has her own consulting company. And it's interesting. We all talk about go out there and find a job. We'll create jobs for you, unemployment, and that kind of stuff. Do you find a difference between a producer and a consumer and what they actually do? Do they have their own business or do they work for other individuals?
That's a good question. And the trend that's going on today is to kind of get out of the workplace working for someone else and to create your own job. I tell my children, my two kids, I said, you know, when you get older, you're going to have to create a job rather than find a job. And the wealthy, they do that. They might have a job, but at the same time, they have the secondary thing that they're doing, whether it's consulting, teaching on the side, whatever it is to bring that additional income in. And that's going to be key moving on to the future because some jobs are getting phased out because of technology. Technology comes, we don't need that anymore. So we're going to have to get creative in how we look at our future. Our children are going to have to get creative. Yes, I could be a doctor, but now I might have to be a certain type of doctor. I might specialize in this rather than that. And again, find those mentors that are out there. Go out and read about entrepreneurs. What are they doing? What new jobs are opening up? What new technologies are breaking forth now? I have an iPad, and I'll show my son, look at all the accessories that are made for iPad. Someone saw someone make something great, and they said, you know what? I can make something for that, and they created their own job.
Yes. And with the internet now,
oh, that's even better.
Expansion is fantastic. You can do so many different things. The key is this. Unemployment takes a job away from you, but creates opportunities to develop a business mindset. If you talk to the right people, don't just jump into it. Ask questions about incorporating, tax issues. Make sure that you talk to people about the ramifications of doing something a certain way versus just jumping in. Many people have been hurt that way. But the context is, in talking to our experts, Rodney, I really appreciate what you're doing for us, and I'll continue to come back and get some of those lines you give us, those comments you give us, the quotes. Those are fantastic, and I think it lays it in there that you don't have to be a consumer all of your life. You can become a producer, and in producing, you can create your own way. With that said, thank you. Thank you, Rodney.
Thank you, sir.
And you all, take it to the bank and save.
Wow, there was a plethora of information that was just happened there. The guy is amazing when you talk to him. I just gain so much information. And there's several things that I want to talk to you about. And I think it's very essential for you as an individual to think a little about these kind of concepts as we drive home a couple of these issues. Many of us may not have access to a computer. But did you know at the libraries you have free use of a computer? If you line up and you sign up for the computer, you can use it for an hour. Understand how to use a computer. Get in there, get familiar with it. Do some searches. Find out some things online. Talk about incorporating. Look and do some research about this issue of business ownership. Develop a specific approach that you think will be beneficial for you. There are so many opportunities that are out there, and I choose to talk about that right now because the resources are key. When you're looking at getting advice, I ask you to go down to the local Seventh-day Adventist church. They have resources there for days. Talk to the pastor. Call us up. Send us an email. Ask the questions that you may need to ask because these are relevant issues. And so today, We're talking about major financial crises, what causes financial problems, and stressors in life. And one of them, or we're going to group a bunch of them right now, and it has to do with income taxes, gambling, and substance abuse. We're going to touch on those specific issues, but focus on the issue called the income tax and gambling issue, because those are relevant to the specific concerns. Many people get out there with an idea and a thought process, and they don't really understand the specifics of what they need to prepare for. You know, if you open a business, you need to understand whether or not you're doing it as a sole proprietor. If you're doing it as a corporation, are you doing it as a nonprofit? What are the tax ramifications? And you as an individual, as a sole proprietor, need to understand that you need to plan for how you pay those taxes, whether it be on a quarterly basis and how you pay the tax man. Because many of us don't put away money for emergencies. And in most situations, when you open a business, people don't even think about the fact that the tax man is going to ask for his funds on an ongoing basis. And those can get out of control extremely fast. I'm redundant there, extremely fast, extremely, yes. It's going to get out of control quickly. What we are trying to tell you is little hints of how you can do it. Now, I have a little caveat for you that I'd like to share with you. The story is, or this is a case scenario for us to think about. You're a business owner, not a business owner. You work for a company and you make a substantive amount of money. Your spouse works from home. She is a researcher, and she does a lot of work from her computers at home. The both of you bring in approximately $6,800 a year. $6,800 a year. Now, we're going to be talking about the issues of tax debt, garnished wages, zero savings, and things that can push towards, of course, a faltering relationship, a faltering marriage. In this case, they make approximately $100,000+ a year, but they have $15,000+ in tax debt. They owe the IRS. They didn't plan accordingly. The home-based business, they weren't putting money away in association with that tax debt on a quarterly basis. So they ended up owing money, and to the point that they weren't able to pay it off. So what then the IRS did in this possible scenario is they garnished the wage earner's business, wage earner's monies or salary. So his whole salary, or $800 of his salary, is garnished. It's taken and it's put towards the repayment of that $15,000 debt. But they're barely able to keep up with the interest on that debt that the IRS has on them. So they're garnishing his wages. In addition to that, they're paying an additional $250 per month to pay down that debt. Now, let's give you some background information. They make about $6,800 a year. They make $6,800 a month, and then they also spend $5,900 a month. So they have a $900 buffer in there, which they should be putting into savings. But yet, they don't have any savings. And then, of course, you take a look at the issue that you have family, you have children, and we're not saving any money. Of that $900 buffer, we don't know where that money is going. Of course, then you take a look at the fact that despite that extra $900 a month, too, they're also spending money for special runs to major distribution places. They're spending $100 a month to collect sports memorabilia. They're doing a $67 a month for a health club membership, and they're doing a variety of things, and yet they're just scraping by. $48 a month for magazines. And so you're getting a perspective of what's going on. Then you start finding out a little bit more about this family. You start asking questions and saying, okay, what do you have in reference to assets? Well, we have a home. Fantastic. Are you behind in your payments? No. How much are you spending on your mortgage? $2,100 of the $6,800 revenue goes towards mortgage payments. Of that, $5,900 in expense. And of course, you ask other questions, you find out that he may have a collection worth $30,000 that he's been putting money away every single month, buying into a collection. Now, let's look at all of those items together. They're not saving anything. They have taxes that are going and driving up a wall. Any of you that have dealt with that, I have in the past, and you understand how it can create stress in any type of relationship, and you can see the relationship spiraling out of control because you have a spender out there who's in control of the finances, and you have a saver that's in there but doesn't have any control of those finances. The one that works from home is the one that saves. The one that goes out to work every day and is getting his wages garnished to help pay off that IRS debt is the one that spends money, and he's continuing to spend a whole lot of money on his collectible. Now, you ask specific questions, and you find out there are things that you can do in your life, this as an example, to change the scenario very quickly. It's something that is an actual thing that happened. It was something that was out there on the net that was interesting to me. So, as an individual, what would you do placed in that situation? What would you do as an individual, and what kind of steps would you take to solve the problems that they're dealing with? And this is what the actual consultant said to them to take care of. One is control your cash flow. Control the cash flow, number one. Unfortunately, that was a drastic step, so what they had to do is they had to take the control of the cash from the spender and put it in the control of the saver. So you found out the person that looked more specifically on where money was going and was more apt to keep a budget. Now, of course, they know generically where things are at, but they didn't know where that $900 of additional funds were actually going on a monthly basis. And it was by finding out how they could control their cash flow that they could actually curtail some of those expenses. And that's how they found out that he was spending a lot of money on his collectible items that put their children at risk. One of the other steps that they took was, this family makes $100,000+ a year, and they have a lot of assets, and they have a lot of things in place. So the second thing they told them to do is get a will and a trust, so that your children are not at risk in tying up things for long terms, because you haven't prepared accordingly how things will transition in case something bad happens. Then, of course, they talk to them about add life insurance. Add life insurance. That is a key thing, and you'll find it in a variety of different areas. Ask business leaders, ask individuals that you respect about life insurance, and that's a critical issue. Many of our underserved communities, you find, are going through difficult situations, made even much worse because they're not prepared for these circumstances. You find people setting up car washes and other type of fundraisers to help these families in difficulties raise the monies that they need to help take care of the final transition of bearing their child or their loved one. It is something that's so simple to do, and they're very inexpensive if you get in while you're young, and that's a key issue to take a look at. And of course, we need to take a look at how we get rid of the debt. Once we assess our current situation, then we know what we need to do and what we need to go after. Now, the critical item in all of this had to do with this $15,000 IRS debt. This individual is getting his wages garnished, and yet he's sitting on a $30,000 collectible, collectibles of whatever they could be, cards, whatever the case is, but he's sitting on this that has a value that's significant. What would you do? The decision is there. You have a collectible worth $30,000. You have a tax lien on your garnishing your wages, and it's $15,000, causing this monkey in the room all the time. You're dealing with your garnished wages. You're dealing with these issues that's tearing your relationship apart. What would you do? Remember, Luke 12:15. It's not about the abundance of your possessions. What matters is what you can do with the funds to help your family and to help others. Getting rid of that tax debt will do something accordingly. In addition to that, a couple of other solutions that were provided was to set aside money on a quarterly basis for taxes. So they were able to recommend an automatic deposit into a savings account so that money is waiting on a quarterly basis to pay on those taxes for the entrepreneurial sole proprietorship that she had working from home. Those are the minor items that could take care of things. And there's one other thing, is checking into increasing your emergency savings fund. Those are the major items that were discussed as a possible solution for these people's concerns. So where are you? What are you doing? What are your concerns? What are your stressors right now? In this situation, they were able to talk the gentleman into selling his collectibles at a lower rate, but he was able to get the $15,000 out of that collectible and pay off the debt. And that put them in a whole different situation because he's now not having his wages garnished. He has more money to put away into savings. They are more relaxed. They have life insurance and that type of thing. That, if you don't take an active look at assessing where you're at, creating a budget, putting away emergency savings money, going after paying off debt, you're gambling with your life. You're gambling with your family's life. And it's essential that you take a serious look at these specific items. When you take a look at gambling, which is another major area of financial concern, it impacts a lot of us. Close to 10% of individuals, according to the study, that it impacts up to 9.6% of individuals are at risk for gambling issues specifically. However, they say that only about 4.8% of individuals are moderate to severe gamblers. What does that mean? I'm not quite sure, but it does say this. Gambling is something that's relevant to all of us. Substance abuse is also an issue that's relevant, and it's impacting our young people as well as those in our underserved communities. We have to figure out a way how we can get people away from taking a risky attitude and not thinking about the ramifications of what could happen. Work-related difficulties happen, productivity goes up, productivity goes down, absenteeism goes up. We look at higher rates of suicide. We see that there are higher rates of, guess what? Marital breakdowns, family breakdowns. The family goes away, and that's one of the key issues that people aren't thinking about. We're looking at people beginning the process because they get into debt of seeking illegal activities to support their gambling, and there's those concerns. And then, of course, there is significant financial loss when you're not able to put a lot of these things, these concerns that all of us need to address, into check. So we're talking about income tax. Seek a professional for advice. Talk to them. Additionally, talk to the family, work out things that can help you better take money to the bank. God bless you.